Aneja Limited, a newly formed company, has applied to a commercial bank for the first time for financing its working capital requirements. So, since it is a newly formed company, there won't be any opening stock of raw materials or opening stock of work in progress or no opening stock of finished goods. The following information is available about the projections for the current year. Estimated level of activity 1,04,000 completed units of production plus 4,000 units of work in progress. So during the period, the company produced 1,04,000 units of finished goods and 4,000 units of work in progress. Based on the above activity, estimated cost per unit is so raw material cost per unit is rupees 80 per unit, wages it is 30 per unit, and overheads exclusive of depreciation is given, which is 60 per unit. It is exclusive of depreciation in the sense the 60 rupees is a cash cost expense. There is no non-cash expenses included in this 60 rupees. So the total cost of producing one unit of the finished goods is 170 rupees per unit. And selling price per unit is rupees 200, which is there's a profit of rupees 30 per unit. Raw material in stock, average 4 weeks consumption and work in progress assume 50 percentage completion stage in respect of conversion cost and material issued at the start of the processing. It means that first let's understand what is this assume 50 percentage completion stage in respect of conversion cost. So conversion cost is nothing but direct wages and overheads. So in work in progress, only 50 percentage of labor is used and 50 percentage of overheads is used. But as far as material is concerned, material is issued at the start of the processing, which means that 100 percentage material has been used in the work in progress. So work in progress includes 100 percentage materials because materials are introduced into the production at the start of the process, and work in progress includes 50 percentage of wages and 50 percentage of overheads. Finished goods in stock is 8,000 units. So in this question, both work in progress and finished goods are directly given in terms of units. So the holding period of the work in progress holding period and finished goods holding period is not required because at the end of the period, the company has a closing work in progress of 4,000 units and closing stock of finished goods as 8,000 units. So since the unit is given, the holding period is irrelevant. We can directly calculate the work in progress stock and finished goods stock with the help of the units itself. Credit allowed by the suppliers is average 4 weeks and credit allowed to debtors or receivable holding period is 8 weeks. Lag in payment of wages is 1.5 weeks. Cash at bank for smooth operation is expected to be 25,000 rupees. Assume that production is carried on evenly throughout the year, which is 52 weeks, and wages and overheads accrue similarly. All sales are on credit basis only. So since all sales are on credit basis, we can directly take 100% of the sales while calculating the debtors. So let's start with the question. The requirement of the question is to prepare working capital estimates. So working note 1, stock of raw materials. So during the period, we produced how many units? During the period, we produced 1,04,000 units. And for every 1 unit that we are producing, we are expecting to incur a cost of 80 rupees for materials. So what is the amount of raw material cost that is incurred for the production? So raw material consumed in production. So during the period, we produced 1,04,000 units, and for every 1 unit, we incurred 80 rupees cost. So for 1,04,000 units, it will be 1,04,000 into 80, we get 83,20,000 rupees. So this is the amount of raw material consumed in production. But raw material is not only consumed in production, raw material is also consumed in work in progress. So here we can see that work in progress includes 100% of raw material. So we have produced work in progress of 4,000 units, right? Even for that 4,000 units, raw material has been consumed. So raw material consumed in work in progress, raw material consumed in work in progress, just 4,000 units is the work in progress. And for 1 unit, it is 80 rupees. So raw material consumed in work in progress will be 4,000 into 80, we get 3,20,000. So what is the total consumption of raw material? So total consumption of raw material will be 83,20,000 plus 3,20,000, we get 86,40,000. So this 86,40,000 is the total consumption of raw material during the 52 weeks period, right? But what is the raw material holding period? It is given in the question as 4 weeks. So stock of raw material will be equal to, so stock of raw material is equal to 86,40,000 is for 52 weeks. Then for 4 weeks, how many, what is the amount of raw material? It is 4 by 52. So 86,40,000 into 4 by 52, we get 6,64,615 rupees. So this is the stock of raw material amount, which is 6,64,650. Now, second working note 2, stock of work in progress. So here we know that work in progress includes 100% of raw material, 50% of wages, and 50% of overheads. So we can directly calculate the amount of work in progress stock. So material amount. So work in progress includes 100% of material. So 4,000 units multiplied by 80, we get 3,20,000. And wages, it is 4,000 into what is the wage cost per unit? It is 30. But this 30 is 100%. But work in progress includes only 50% of labor. So into 50%, we get 60,000. And overheads costs, again 4,000 units multiplied by overhead cost per unit is rupees 60 per unit. Again, the 60 is 100%. But work in progress has consumed only 50% of overheads. So multiplied by 50%, we get 1,20,000. So work in progress stock is equal to 3,20,000 plus 60,000 plus 1,20,000, we get 5 lakh rupees. So this is the stock of the work in progress. Now, again, in this question, they have not mentioned whether to use total cost approach or cash cost approach. But if nothing is mentioned in the question, it is always better to solve the question using the cash cost approach. And whenever we are solving the question using cash cost approach, it is always better to prepare cash cost sheet as a working note. So that we can directly take the numbers from there and calculate the current assets and current liabilities. So working note 3. Cash cost sheet. So basically cost sheet starts from opening stock of raw material, but here we don't have opening stock of raw material, and raw material purchase is also not given. If we want, we can calculate it, but we don't have the relevant information for calculating purchases, we have only the closing stock. But what we can do is we can directly take the raw material consumed. Why? Because opening stock of raw material plus purchases minus closing stock of raw material is going to give raw material consumed only. So we can directly start the cash cost sheet with raw material consumed. Raw material consumed is equal to, which we have already calculated. Total raw material consumption during the period is 86 lakh 40,000. So raw material consumption is 86 lakh 40,000. Then wages. So wages, we have incurred the labor cost for both finished goods as well as for the work in progress, right? So how many units we have produced during the period? We produced 1,04,000 units, and for every 1 unit we produced, we incurred wage cost of or labor cost of 30 rupees per unit. So 1,04,000 into 30 plus, in addition to this, we have also incurred labor cost for work in progress. So we have 4,000 units of work in progress. For 1 unit, it is 30 rupees multiplied by 50%. Why 50%? Because work in progress has consumed only 50% of labor. So 1,04,000 into 30, we get 31,20,000 plus, in addition to that, 4,000 into 30 into 50%, we get 31,80,000. So this is the wage cost incurred during the 52 weeks or during the period of 1 year. Then we have overhead costs. Again, overhead is also incurred for the production of 1,04,000 units, and overhead cost is also incurred for the work in progress of 4,000 units. So 1,04,000 units multiplied by, for 1 unit, it is 60 rupees. So into 60 plus 4,000 units of work in progress. For 1 unit, it is 60 rupees and multiplied by 50%, because work in progress includes only 50% of the overheads. So we get 63 lakh 60,000 is the amount of overhead cost incurred during the period. So now what is the total or gross factory cost? So gross factory cost is equal to, when we add 86 lakh 40,000 plus 31 lakh 80,000 and 63 lakh 60,000, we get 1 crore 81 lakh 80,000. So this is the gross factory cost. Now this gross factory cost also includes some amount of work in progress, right? Now, when we adjust the opening stock and closing stock of work in progress to the gross factory cost, we will get cost of production. So here, when we add opening stock of work in progress to the gross factory cost, and when we subtract closing stock of work in progress from gross factory cost, we will get cost of production. Now, why we are adding opening stock of work in progress? So listen, this opening stock of work in progress is nothing but closing stock of work in progress of the previous period, right? So opening stock at the beginning of this period would have been converted into finished goods during the period, right? So it is added to the gross factory cost while calculating cost of production. But closing stock of work in progress is the amount of work in progress that we have at the end of the year. Still, it is a work in progress. It has not yet been converted into the finished goods. So we are subtracting closing stock of work in progress while calculating cost of production. So here, since it is a newly formed company, opening stock of work in progress is 0, and closing stock of work in progress, we already calculated in working note number 2, which is 5 lakh rupees. So minus 5 lakh. So this figure came from working note 2. So 1 crore 81 lakh 80,000 minus 5 lakh, we get 1 crore 76 lakh 80,000. So now from cost of production, if we are adjusting opening stock of finished goods and closing stock of finished goods, we will get the cost of goods sold, right? So from cost of production, if we are adding opening stock of finished goods and if we are subtracting the closing stock of finished goods, the resulting figure will be the cost of goods sold. Now, why we are adding opening stock of finished goods to the cost of production to calculate cost of goods sold? Because opening stock of finished goods is nothing but closing stock of finished goods of the last period, right? So opening stock of finished goods would have been sold to the customer during this period, right? So it is added to the cost of production while calculating cost of goods sold because it is opening stock of finished goods would have been sold to the customer, right? But closing stock of finished goods is the amount of stock of finished goods that we have with us, which is not sold to the customer, right? It is not sold to the customer, but it is included in the cost of production. So we are removing it in order to calculate the cost of goods sold. So since it is a newly formed company, opening stock of finished goods is zero and closing stock of finished goods is something which we need to calculate. So actually in this question, there are two methods of calculating the closing stock of finished goods. So first, let's look at the simple method of calculating it. So here we calculated 1 crore 76 lakh 80,000 is the cost of production. This cost of production is for how many units? So this cost of production is for 1 lakh 4,000 units. What is the amount of or how many units of closing stock we have at the end of the period? We have 8,000 units of closing stock at the end of the year, right? So here, let me do a simple calculation here. So units and costs. So for 1 lakh 4,000 units, if your cost of production is 1 crore 76 lakh 80,000, then what will be the cost for 8,000 units? Just do the simple cross multiplication. We get 1 crore 76 lakh 80,000 into 8,000 divided by 1 lakh 4,000. We get 13 lakh 60,000. 13 lakh 60,000. So this is one way of calculating the closing stock of finished goods, right? So this is for 1 lakh 4,000 units. Then for 8,000 units, how much it will be? Simple calculation. There is an alternative way of doing it, which is here we have 8,000 units of finished goods at the end of the period, right? What is the total cost of producing this finished goods? It is rupees 170 per unit. And this total 170 rupees is a cash cost only because the overheads is exclusive of depreciation. It does not include any depreciation. So it is a cash cost. So this total 170 rupees is a cash cost only. So simply take for 1 unit, the total cost is 170 rupees means then for 8,000 units, how much it will be? 8,000 into 170. If you multiply 8,000 into 170, we will get the same 13 lakh 60,000, right? So the cost of goods sold will be equal to 1 crore 76 lakh 80,000 minus 13 lakh 60,000. We get 1 crore 63 lakh 20,000 is the amount of cost of goods sold. Now in this question, we do not have any admin expenses and sales expenses. So here to cost of goods sold, if we are adding admin and selling expenses, we will get cost of sales. So here, since we do not have any admin and selling expenses, it is zero. So cost of sales is equal to cost of goods sold, which is 1 crore 63 lakh and 20,000. Now, since we have prepared the cash cost sheet, the calculation of closing stock of the calculation of closing stock of finished goods, we don't need to perform it because it is we have already calculated in the cash cost sheet itself. So next, start with working note number 4. The next current asset that we have is debtors. So debtors are receivables. So receivables, we can either calculate it based on Receivables can be calculated based on cost of sales or total value of sales. But here it is always preferred to calculate debtors or receivables based on cost of sales because sales includes profit, right? We don't need to finance our profit. We need to finance our cost only, right? So profit should be ignored. So it is always better to calculate receivables or debtors based on cost of sales rather than sales. So here, this cost of sales is for 52 weeks period, and the debtor holding period is, it is 8 weeks given in the question. So for 52 weeks, if it is 1 crore 63 lakh 20,000, then for 8 weeks, how much it will be? So calculate the amount of debtors. So debtors is equal to 1 crore 63 lakh 20,000 into 8 by 52. So the amount of debtors will be, so when we take 8 by 52 into 1 crore 63 lakh 20,000, we get 25 lakh 10,769 rupees. So this is the amount of debtors. Now we are done with all the current assets. Cash, it is directly given in the question, which is 25,000 rupees, I guess. Now working note number 5, creditors for raw materials. Creditors for raw material. So if it is an existing company, it is always assumed that opening stock of raw material and closing stock of raw material are same. So raw material purchased is equal to raw material consumed. So this assumption is applicable only in case of existing companies. But if it is a newly formed company, we have to calculate the amount of raw material that is purchased during the period. So what is the formula for calculating the raw material purchased? It is raw material consumed during the period plus closing stock of raw material. See, we are adding closing stock of raw material to raw material consumed because it is assumed that this closing stock of raw material is purchased during this period. And we have to subtract opening stock of raw material because opening stock is nothing but closing stock of the last year. So it was purchased during the last period, or it was purchased during the last year. So the opening stock of raw material is not purchased during this period. So we are subtracting it. So when we adjust closing stock of raw material and opening stock of raw material to raw material consumed, we will get the amount of raw material purchased. Raw material purchased. So what is the amount of raw material consumed during the period? We have already calculated it in working note 1 itself. We have calculated it. It is 86 lakh 40,000 is the amount of raw material that is consumed during the period. So raw material consumption is 86 lakh 40,000. Now what is the closing stock of the raw material? We have already calculated it in working note number 1. It is 6 lakh 64,615 is the closing stock of the raw material. So closing stock of raw material is 6,64,615. And since it is a newly formed company, opening stock is 0. So the amount of raw material purchased will be equal to 93 lakh 4,615 rupees. So this is the amount of raw material that is purchased during the period. But the creditors is allowing us a credit period of 4 weeks. So what is the amount of creditors? So this is the amount of raw material that is purchased during the 52 weeks period. So amount of creditors will be equal to 93 lakh 4,615 into 4 by 52. So we get the amount of creditors as 7 lakh 15,740. And in addition to the creditors for raw material, we are also having some outstanding wages at the end of the period. It is mentioned in the question that lag in payment of wages is 1.5 weeks, right? If the laborers are working today, we are going to pay them after 1.5 weeks. So there is a outstanding wages for a period of 1.5 weeks. So we have to calculate the outstanding wages because that is also a current liability. So working note number 6, outstanding wages. So the total amount of wage or the total amount of labor cost during the period is, we have calculated it in working note number 3 in the cash cost sheet. From here we can see that the total amount of labor cost that is incurred during the period is 31,80,000, which includes the amount of labor cost incurred for production as well as for the work in progress. That's right. But the total amount of wages is 31,80,000. So outstanding wages will be 31,80,000 is for 52 weeks period, but the outstanding wages is only for 1.5 weeks. So into 1.5 divided by 52. So the amount of outstanding wages is equal to 31,80,000 into 1.5 by 52. So we get 91,731. So now we have all the current assets and current liabilities. We can prepare the working capital estimate. Working capital estimate. So starting with the current assets, the first current asset that we have is the stock of raw material. Stock of raw material is equal to 6,64,615. So this is what we calculated in working note numbers 1. Then we have stock of work in progress, which we calculated in working note number 2. Stock of work in progress is equal to 5 lakh rupees. Then we have stock of finished goods. We calculated it in working note number 3 in the cash cost sheet. We calculated the stock of finished goods, which is 13 lakh 60,000. So stock of finished goods is equal to 13 lakh 60,000. Then we have debtors. The amount of debtors we calculated in working note number 4. The amount of debtors is 25 lakh 10,769. Amount of debtors is 25 lakh 10,769. Then we have cash worth of rupees 25,000, is it? So the amount of cash given in the question is, yeah, it is rupees 25,000. Amount of cash is 25,000. So now the total current assets is equal to. So when we add 6,64,615 plus 5 lakh plus 13 lakh 60,000 plus 25 lakh 10,769 plus 25,000, we get 50 lakh 60,000, 50 lakh 60,384 rupees. So this is the total current asset, which is also known as the gross working capital. Now from gross working capital or from total current assets, if we are subtracting the current liabilities, we will get the net working capital. So let me write it as 1. Now let's write the current liabilities. So from this, we have to subtract the current liabilities. So the first current liability that we have in this question is creditors for raw material. So the amount of creditors for raw material is calculated in working note number 5. We calculated the creditors is 7,15,740 rupees. So 7,15,740. Then we have outstanding. Then we have outstanding wages, which is calculated in working note number 6. The amount of outstanding wages is 91,731 rupees. So it is 91,731 rupees. So total current liability is equal to total current liability is equal to 7,15,740 plus 91,731. We get 8,07,471. So let me write it as 2. Now net working capital is nothing but 1 minus 2, which is total current asset minus total current liability. So net working capital is 1 minus 2. So the total current asset is 50,60,384 minus total current liability is 8,07,471. We get rupees 42,52,913 rupees. So this is the amount of net working capital.